Hi, this is Lara at Elliott Wave Gold with your daily analysis for Tuesday, 23rd of December. I'm recording the video for you today. Just gone nearly 3 p.m. Eastern Standard Time on the 23rd Eastern Time, Christmas Eve, my time. Tomorrow, the analysis will be prepared for me during my Christmas day. So tomorrow I'm not going to do video, I'll just do a thorough text and charts for you just to cut down my workload on Christmas Day. Merry Christmas everybody. I was expecting at the end of yesterday's analysis that we were going to see just a bit more downward movement, and the target for it to end was at 1162. Price fell 8.83 short of that target. It turned around and we've seen quite a few green candlesticks on the hourly chart. That was the first indication that downward movement was over, and the next movement, a third wave for gold up, should have begun. I expect that's most likely the case. I have 2 points you can use depending on risk appetite. Initially, there's an orange channel at the hourly chart level. A nice clear breach of that with upwards movement will be early confirmation that the third wave has begun, and we will have full and final price confirmation that gold is in a third wave up if we see a new high above 1198.24. The target for the third wave to end is at 1278. Alternately, and I have an alternate hourly wave count for this, if we see a new low below 1170.83, that indicates obviously that the downward movement is not over. It might continue for 3 more days in total. The target is 1140. The invalidation point remains the same. I'm not expecting a new low below 1131.09. Okay, let's look at the charts. My main wave count, or my only wave count, sees primary wave 4 over here. This is where primary wave 5 has begun, and I'm not publishing a wave count which sees primary wave 5 over down here because I just don't think it has a very good fit. You would have to label that 1, 2, 3, 4, 5. 3 would work okay. Couple of problems though. 4 would be here and 2 would be here. 4 would be a double zigzag lasting 11 days. 2 would be a single zigzag lasting 5 days. 4 is too long in duration and 2 is too brief. They're both of the zigzag family, and they would be of a similar depth in relation to their prior actionary wave. So there would be very little alternation between the second and fourth wave. From this high to this low, the downward movement has a cursory count of 7, that's corrective, so it fits better as a zigzag than it does as an impulse. And if we saw primary 5 over here as I've described, there would be no Fibonacci ratios in price between 1, 3 and 5. So I do not think this is where primary 5 ends. I think that primary 5 is continuing, and within it only intermediate wave 1 is over. When we see a 5-wave impulse down here, we now have some great Fibonacci relationships. A leading contracting diagonal for minor 1 is followed by a deep zigzag for minor 2 just over the 0.618 ratio, lasting a Fibonacci 5 days. Minor 3 has a 1.618 price ratio to minor 1, and now the fourth wave shows perfect alternation with the second. It's a running contracting triangle lasting a Fibonacci 8 days, so it has a 1.618 duration to the second wave. Triangles are normally more time-consuming structures than zigzags, and now the fifth wave has a very, very close 0.618 Fibonacci price ratio to the first wave. So I am confident that a first wave impulse ends here, and this is where a second wave correction begins. It looks like intermediate wave 2 is unfolding as a very common expanded flat correction, and they subdivide 3, 3, 5. The only thing which is uncommon about this one is the length of the B wave in relation to the A wave. Within flats, the B waves are most commonly up to 138% the length of the A wave. This one's longer at 172%, but that is entirely within the allowable limit of up to twice the length of the A wave. So it's very, very likely that minor wave C will move at least slightly above the end of A to avoid a truncation and a rear running flat, and I am not going to label minor wave C over here because it just doesn't fit. That would mean intermediate 2 being over here would be a running flat, and its C wave would have a substantial truncation just over $17. Also, this movement does not subdivide well at all as an ending contracting diagonal, but it does fit as a leading contracting diagonal. The difference is in the subdivision of the actionary waves. That's the first, third and fifth waves. Within an ending diagonal, all of the waves must be zigzags. Within a leading diagonal, the first, third and fifth waves are most commonly zigzags, but they may also be impulses. This fifth wave and this third wave, when we look at these movements carefully on the hourly chart, subdivide perfectly as 5-wave impulses. They do not fit well at all as zigzags. So this is very likely to be a leading diagonal and very unlikely to be an ending diagonal. What all that means is overall upward movement is incomplete. Minor wave C should continue. If intermediate wave 2 completes in a total Fibonacci 13 weeks, it will be even in duration with the 13 weeks of intermediate wave 1. So I am now expecting that after this week, its 10th week, it will continue maybe for 3 more weeks, if it's going to exhibit that duration. Minor wave C must subdivide as a 5-wave structure, so there are only 2 structural possibilities, an impulse or an ending diagonal. An ending diagonal again requires the subwaves to be zigzags, and because this upward movement is very clearly a 5, not a 3, I think we can eliminate that idea for minor C. It's looking like it's unfolding as an impulse, with a leading contracting diagonal for the first wave, followed by a typically deep second wave correction which subdivides now perfectly as a double zigzag, and the third wave should have begun at 1278. It would reach equality in length with the first wave. That's the ratio I'm using to calculate the target, because it fits so nicely with the higher target, which would see intermediate wave 2 end at the 0.618 Fibonacci ratio of intermediate wave 1 at 1283.27. This Fibonacci retracement is drawn along the length of intermediate wave 1 from this high to this low. It's not drawn to this low because that's not intermediate wave 1. Intermediate wave 2 may not move beyond the start of 1 above 1345.22, and I still have confidence this invalidation point will not be passed, because if it were to be passed, that would mean we'd have to label primary 5 complete here, and as I've outlined, that's problematic. Within minor wave C, my only question today is this second wave over? I think yes, it's very likely to be over, but there is a slim possibility that it could continue further as per the alternate hourly wave count. If it does, it may not move beyond the start of 1 below 1131.09. Let's look at the main hourly wave count with the end of the X wave, the 3 in the opposite direction, joining the 2 structures of this double zigzag, ends here. And this is where the second zigzag in the double begins. It subdivides 5, 3, 5. We term a triangle a 3. It's a corrective structure. This one is a contracting triangle. There is no Fibonacci ratio between subminuet waves A and C, and it was that ratio which I was using to calculate a target. That's why the target was not met. But the C wave on the 5-minute chart is a complete 5-wave impulse, and it's most likely over here at 1170. This upward choppy sideways movement though isn't completely convincing, but this wave count has the best fit in terms of subdivisions on the 5-minute chart. We probably have a leading contracting diagonal for a first wave, followed by either a double combination or double flat for a second wave. The first structure in the flat is an expanded flat subdividing 3, 3, 5, and importantly this upward wave here on the 5-minute chart fits perfectly as a 3-wave zigzag. So that's what I mean when I say this has a good fit on the 5-minute chart. I'd expect choppy, overlapping sideways movement for this wave count still for some time, for this little second wave correction to come to an end. The purpose of double flats and double combinations is to take up time and move price sideways. It may not move beyond the start of the first wave below 1170.83. Draw this channel around this downward movement using Elliott's technique for a correction from the start of the zigzag to the end of the B wave with a parallel copy on the end of the A wave. When we have at least one full hourly candlestick above this orange trend line, we shall have trend channel confirmation that minute wave 2 is over and minute wave 3 up is then underway. We will have price confirmation, full confirmation with a new high above 1198.24. Alternatively, if we see a new low below 1170.83, this is the wave count I would use. At that stage, I would expect maybe a total of 3 more days of downward movement toward a target at 1140, where subminuet wave C would reach 1.618, the length of subminuet wave A. The invalidation point is the same as at the daily chart for the same reason. This wave count would allow maybe 3 more days of downward movement so that minute wave 2 could last a total Fibonacci 13 days. That would give it a 0.618 duration to minute wave 1, so that would be my expectation. But on the 5-minute chart, this doesn't have as good a fit. This upward movement does not subdivide well at all as a 5, it fits very nicely as a 3. If we see this orange channel, which is drawn in the same way, breached with upward movement, this alternate will substantially decrease in probability. It will be invalidated fully and firmly with any high by any small amount at any time above 1198.24. I think it's unlikely, but it's possible, so that's the risk we must accept today. That's all for me today with your gold analysis, and I hope everyone is looking forward to an awesome Christmas.